I think we're going to have to start thinking of a much higher gold price. To me, it seems that if I'm correct in what we just discussed, and the recognition that gold is going to be used again in a good part of the world by a good amount of the players, then suddenly people are going to beat a path to it. And I think it's you that have said it recently that the standard ownership of gold in the country used to be about 2% of portfolios in America. Now it's half of 1%. Mm-hmm. Oh, that means there's a 300% increase if it gets back to historic.
The BRICS alliance has been making waves in the international economic landscape in recent years. Their primary focus has been challenging Western economic dominance, mainly targeting the U.S. dollar's global trade and finance hegemony. PeterGrandich, a renowned financial market commentator known for accurate predictions in precious metals and commodities, has been particularly bullish on the BRICS nations. Grandich believes that within the next 3 to 5 years, the impact of BRICS on global trade could rival that of the Industrial Revolution, a bold claim that underscores the potential significance of this economic bloc. Central to the BRICS strategy is developing a native currency that could potentially rival the US dollar in international transactions. Some analysts suggest that a gold-backed currency could be a formidable challenger to the greenback, aligning with the bloc's de-dollarization agenda. The appeal of the BRICS alliance is growing. Recent reports indicate that 40 countries have formally applied to join the group before the 2024 summit, signaling a potential expansion of its influence and reach. Amid these geopolitical shifts, gold has seen a notable resurgence. J.P. Morgan has projected gold prices to average $2,500 per ounce in Q4 2024. Grandich, long bullish on gold, had previously set a target of $2,536 per ounce. However, he suggests that even higher prices could be possible if gold becomes central to a new BRICS-led economic system. This year, the substantial gold accumulation by BRICS nations lends credence to the idea that the precious metal could play a pivotal role in their economic strategy. If implemented effectively, a gold-backed BRICS currency poses a significant challenge to the US dollar's global dominance. Please tune in for our exploration of PeterGrandich's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I've been a huge proponent to how big the BRICS are going to be. I've said for 2 years now that when it's all said and done, somewhere within the next 3 to 5 years total, what they will do to world trade and the impact will be the same what the Industrial Revolution did to world trade. So that's a big, tall order. Mm-hmm. I've also stated that the America will be outside looking in. This is not something that we're going to somehow partake in or make something off of. Remember, these are groups of nations, for whatever reasons, there's not enough time to discuss why they should do this, and they're smart to be doing it. But they're looking to trade away from the United States, among themselves, and out of the U.S. hands of potentially a monetary and fiscal system. If they're going to do that, they have to, create something on their own, which has already been underway, and discussed a lot of this in my own work and some of the other people that I interview. But one of the biggest reasons why I've been so bullish on gold was my argument was gold had to be a part of such a thing. At the end of the day, there needs to be something more than just a fiat currency for what's going to take place in the next realm of whatever happens world economics. And therefore, that's the big reason why so many of those players that are more and more making up what's turning out to be the BRICS have been big buyers of gold. And an untold story that is discussed a lot, and I'm not the first to say this, a man named Andy Schectman has brought it up a lot, is how much different countries have repatriated their gold from the United States. Mm-hmm. It's a topic that hasn't got. Why on earth are these countries taking all their gold back that they had the U.S. hold, while many of them are also aggressively, their central banks buying gold? Tommy, it's not for a trade. Mm-hmm. It's not for speculation. It's for what many believe, and we're going to learn, I believe, a good hint of it come these next fall meetings by the BRICS. And that, I think, is going to be the next elevation for the gold recognition and for even the don't worry, be happy crowd to finally wake up and go, wait a minute. We better start picking and start learning about this, because that's the way of the world. That's where we're heading. I've been an advocate of gold from 1200 and above, saying that 2536, which seemed awfully far away when it was 13 or 1400, not very far away anymore. And I would have said to you as late as a month or two ago, hey, Tom, we really shouldn't get too excited about a price much above that. I was never in that camp of, but I think we're going to have to start thinking of a much higher gold price. To me, it seems that if I'm correct in what we just discussed, and the recognition that gold is going to be used again in a good part of the world by a good amount of the players, then suddenly people are going to beat a path to it. And I think it's you that have said it recently that the standard ownership of gold in the country used to be about 2% in portfolios in America. Now it's half of 1%.
Mm-hmm.
Oh, that means there's a 300% increase if it gets back to historical. I certainly think if I'm right about the picture I just painted, then you can make an argument we can go back to that type of percentage ownership, which would mean a much higher price than it currently is now.
Investors are closely watching the U.S. Federal Reserve's September 17th and 18 meeting, anticipating the potential start of interest rate cuts. Federal Reserve Chair Jerome Powell has signaled that this meeting could mark a significant shift in policy, transitioning from the pandemic-era focus on combating inflation to easing monetary policy. The outcome of this process remains uncertain. The COVID-19 pandemic has disrupted supply and investment patterns. New geopolitical tensions and the risk of tariff wars potentially spurred by a second Trump administration could complicate the Fed's efforts to lower interest rates. Whether September marks the beginning of this policy shift will hinge on economic data aligning with Fed officials' expectations. Key indicators include continued progress towards the central bank's 2% inflation target and a labor market balanced with modest wage growth and monthly job gains. Analyst PeterGrandich has expressed concerns about the Federal Reserve's current position, suggesting it is weaker than in previous years when responding to economic crises. He warns that a day of reckoning could be imminent, potentially arriving within months to a few years. Let's get back to the interview.
We went and interviewed any 100 financial advisors now in any part of the United States and basically asked that question, are you comfortable with the Federal Reserve being able to step in if there is a bad event? Absolutely, they would tell you. They always do, it always works, and it's always the Fed put, which it's commonly known as.
Mm-hmm.
The problem that it has now is it doesn't have the ability to go and take trillions of dollars. Could you imagine if for whatever reason we had to inject and create another $5 or $10 trillion for some type of issue? Do you imagine what people would say about it would tip the scales of minority indebtedness to the point where real concerns would overflow about the United States abilities and tied it into all the other issues? I think the surprise to the people when we look back a couple of years from now will be is the Fed was unable to act as it has in the past, and they know it. It's one of the reasons why, Tommy, they've tried to stay more neutral to tight than they normally would be at this point in time, because they really realize that. I mean, if I was the Federal Reserve, I bet you if we can sit with them secretly, there'd be nothing more they would like than a 10 to 20% decline in the stock market orderly over a year or two, and just see a more of an economic malaise. That they don't want to see a deep recession, but that would be their best case. The problem that they have with that is their tools have been taken away from them because we become so more dependent on outside forces. And that's the untold story. And I'm kind of leapfrogging, and I'm sorry for doing this, but the big thing that I think Wall Street is missing, Tom, is how the change in the world authorities are happening. The BRICS, and we'll certainly know if I'm right by this fall when they meet again, are becoming such an overriding influence on what's going to happen here and around the world. And we're not in a position and don't really have any cards to play because we're that kid that they're all saying has to stay outside and can't come in and play with us other kids. And so I don't think the net to your answer is that the Federal Reserve is in any position as it once was to do as much that will be needed when we get this day of reckoning, which to me is only a matter of months to a couple of years at most away. What hasn't been spoken about, I shouldn't say that, in mediums like yours and where I speak, there are people talking about it, but in mainstream financial world, no one's talking about how much foreigners are divesting themselves from American securities. We just continue to see more statistics out today on how foreigners are selling so much more foreign American assets, especially bonds. What could transpire in that scenario that you painted, the Fed may want to cut interest rates, but it may not be able to because there suddenly won't be any real interest to do the continuing financings of these this is still hard to say, Tom, multi-trillion-dollar yearly deficits that we're running at. And that's what the shock can be. And I think they know that. That's why I think they've been more hesitant than normal to start cutting rates, because they'd be really concerned that would lead to the dollar declining more sharply and add to an already serious problem they know that's happening behind the curtains, most of the curtains where people are looking, and that is the continuing moving away from American debt from foreigners.
As we navigate these complex economic and geopolitical landscapes, how will the anticipated shift in the Federal Reserve's monetary policy, amid new geopolitical tensions and the potential rise of a gold-backed BRICS currency, reshape the future of global finance, and what implications might this have for the dominance of the US dollar and the overall stability of international economic systems? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.